All right, ladies and gentlemen, we are live, baby. Welcome. This is David Worrell. This is a beautiful community that we have here. If you're just joining me, we are live. If not, enjoy the show. If you're new to learning, we go over a lot of things. How to trade, what not to trade, what the data is telling us, what the overall general market is telling us. So if you're watching this, leave it on the background. When you hear something interesting, pop on in, say a little something. It's A-okay, baby. We're going to do it. So let me just go ahead and bring some stuff up here so I can make sure if there's anybody in the chat that we don't miss what they got for us, what they're saying, so that way we can keep a good eye on that. But I tell you, PCE data just came out, and I tell you, it was interesting to say the least. Basically, let me get these analytics up here. Basically, for the PCE data, we have neutral. It was neutral. So the year over year, the expectancy was on the forecast that it would actually be lower, but it actually came out the same. So that could actually have some implications that we're going to head lower today. But with the previous being 2.8 and the actual being 2.8, this core PCE, plain and simple, it's pretty much neutral. And neutral can be a really good sign since everybody was expecting such a high inflationary rate where we're going to be spending more things are going to cost more money. So what I would like to do though is just read to you guys exactly what it is, and I like to read it right off Google. We're going to use Google, which we'll talk about Google real soon because they were a rip tater chip to the north side today. But the personal consumption expenditure, or PCE, personal consumption expenditure price index, measures the prices that the U.S. economy, right here, I'll just put it in front of you, measures the price that the U.S. consumers pay for their goods and services. It's a key indicator of inflation and deflation across a wide range of consumer expenses, and it reflects changes in consumer behavior. The PCE is prepared by the Bureau of Economic Analytics, okay? So why is this so important? It's telling you the inflation. You know, there's so much inflation and people are so worried about the inflation that, you know, when we look at the PCE, it's telling us exactly what we're paying for all this stuff. So it was nice to actually see that this thing came out just neutral. You know, it's nice to see that. What's up, Justin? Hey, Justin, if I had your voice and these looks, we'd have 1 million subscribers. You know what I mean? So maybe you should just do a talkover for me. Good to see you in here, Justin. Glad you're here, brother. But yeah, guys, so that core PCE here, I'll just bring up some more data so you guys can understand. You can see we used to have a lot higher PCE, like the PCE year over year. Look at how high this was in January, guys. It was just really high. Well, it's starting to peel back here, and we want to see this continue to go lower because our expectancy for that inflation data is Papa Powell wants that at 2%. So I'll look up the inflationary data for you, just so you guys can have a better understanding of that too, because what we want to see in the inflation is 2%. That's his goal, and he's said many times, hey, we aren't going to stop until we hit that 2% goal. If you were with us live during the chat, you'll notice that he was actually pretty hawkish when we were talking to our Canadian friends to the north side. He said, hey, it doesn't matter. I'll do whatever it takes. We're going to get our inflation down to 2%, and I'm going to stay the course. He was very hawkish, which is good to have somebody there that's saying he's going to bring that inflation down, and he's not worried about who he's pissing off, right? Because none of us want to pay more for our products and have our dollars that we have, whether you have them saved up or whether you're making them, you want them to be worth more, right? We always want more. Everybody does, right? Not just the American people. I think everybody, just a normal human being, wants more. So let's look at that current inflation data. And I will show you here. So the current inflation rate's at 3.48%. I like to bring up these pictures though, just because it actually shows a beautiful chart, and here it is. I like to use this one here, guys. It's pretty easy to see that back here in 2021, we all know we started printing money like crazy. The money printer came out. We were up over 7% on that rate. Now we slowly have came down. 2023, we ended the year at 3.4%. Now this year we're at that 3.5%. So, you know, we started off a little rocky, and we're trying to get that number down. And the only way to get that number down is either to A, raise interest rates, or in Papa Powell's terms, we're going to keep those interest rates the same, okay? And if we keep those interest rates the same, that is going to show in the longevity of things that whip. It takes about 6 months for it to reach us and how it has effects. Let's go over these chats really quick though. Justin, yeah, baby. Good morning, everyone. Good morning, Bob, the greatest moderator out here. Vincent's Amino, I don't know why it's just me, but the music is almost louder than you're talking. Hey, I appreciate you letting me know that. I'll go ahead and turn down the music a little bit for you. I hope that's a little better for you. I don't want to come down too far on that. Bob, what do you think about the music? The music is loud today, David? Okay, yeah. You know what? Another thing too is this mic. I changed the mic on this. Let me turn this off. And this might be a little better for you. Let me know if that's a little better for you, guys. Let me know, well, Bob. We want to make sure we can hear my jaw a-yapping. I appreciate you, Vincent. I hope you can hear better. Yeah, so anyway, back to the data, guys. So, you know, we were up at the 7. We've came all the way back down to 3.5%. We want to continue to see the data when it comes out to bring that data down. If not, we're going to stay on those hikes. So when we talk about these Fed rate hikes, well, we use a tool, right? Let me bring the CME Fed Watch tool up. And guys, everything that I'm using on here, it's all free. I use all free stuff. I'm not paying anything to bring up this data. You can use this too, and I'm more than happy to share this with you. If you're in our Discord, we put all this stuff up, all these different links up for free, so you can see exactly what we're using. So in May, I've been saying this, in May we stay, in May we stay. And you guys can see the only way we're gonna cut a rate hike is at 3%, right? Our chances are only at 3% to actually bring it down 0.25%. In June, you'll also see our likelihood to actually have any rate cuts in June are 11.2%, rather than the almost 90% to stay. So in June, we're most likely to stay. July, same thing. We only have like a 30% chance to actually cut 0.25 rate hike point. Okay, and if all this is confusing to you, you're at least here. You're at least here. You're at least listening. You're at least understanding some of this jargon, so that way you can ingest it better each and every time. We were talking with Justin this morning, and Justin was saying like, this is all still a little confusing to me. And not to put you on blast, Justin, but I told him too. I was like, hey man, you know, I've been keeping a really close eye on this for the past year, and it's still confusing. I still, you know, there's PCE, PPI, initial jobless claims, the GDP, you know, they all come together. And then you can even throw, you know, like oil producers in there. You can throw a whole bunch of weird crap in there. And then you got your core, you know, PCE and PP, whatever. There's so much to this. But if you're here and you're listening, you want to better yourself, you want to understand what's going on in the overall market. And I see the chat now. It sounds like we can actually hear me. That's good. What up, B Stewie? B Stewie's here. Good to see you. Sound volume is low. Sorry, Alan. We're trying to get the sound just perfect. Sound is a little low. Now, are we talking the music? Or are we talking my volume? If we're talking my volume. I can turn my volume up a little bit more for you guys, and we can see that should be a little better for you. Let me know if that's a little better. We want to make sure we get this thing just right. We want to make sure everybody's happy-go-lucky. Let me know what you think about that. I hope the volume's a little better. I turned it way, way, way up, baby. Let me know about that. Sound is a little low. Okay, yeah. Let me know if that's a little better for you guys. I hope we can get this thing down pat. And Bob, Dan, Bob, your voice is perfect now. Justin, thank you so much. From a man with a voice of a radio, yes, Justin. If my voice, if you're telling me my voice sounds perfect, wow, now that that is a compliment, ladies and gentlemen. Can you guys hear the lo-fi music at all in the background? Can I turn that up a little bit, maybe? I'll turn that up a little bit. Let me know if it's messed up. All right, cool. Thank you, Alan. There we go. I'm sorry, that's a loon. That's a loon. Sorry, I got to squint to see that. A loon. Thanks for joining us, brother. I appreciate you being here. Now, look, guys, so this Fed rate tool, let's keep on keeping on with this, as my old grandma likes to say. In July, it's showing that our quarter of a rate hike, or a quarter of a rate cut, is only at 30.4%, okay? 30.4%. Now, this here, this 30.4%, I wouldn't take that bet. Now let's look at September. September is actually showing that we have the ability to come down, okay? We have the same ability to stay as to come down. So we might actually get one in September, okay? Now this is constantly changing, guys. Every time you see a piece of data come out, every single time you see a piece of data come out, you're gonna see this Fed watch tool change, okay? That's why we always check it. That's why we're always bringing you the hottest data, the bite-sized data, so we can ingest it a little bit easier, so you and I, we can understand it better together, okay? So 44.1% is the expectancy of the ability of reducing that rate hike by 1/4%. And if we gotta wait till September to do that, that's just fine. I'm glad to see with this data, this PCE data that just came out, that it's not changing that. We still have the ability to come down in September. So that's a beautiful thing. So now let's go over the overall market and see how that data is being ingested, because that is the main clues here. Now I'm on a 1-minute chart. Guys, we wanna see how it's being taken, and right now we're neutral. And that's the data that came out. The data came out neutral. I was just talking to Bob Bob, the best damn moderator that ever hit YouTube out here, is in the chat. He was saying, hey, give me the quick, give me the lowdown, give me the news, baby. Well, right here it is, right here in front of you, right in front of your eyes. 2.8% is the actual for the core PCE data. 2.8% was our previous. So now when you see this, you can ingest it as neutral, right? If it was previously 2.8 for last year and it's 2.8 for now, you can see we are at a stay. And the same thing for the month over month. The core PCE, personal consumption expenditure, the core meaning we are excluding gas and we are excluding food. Why do we exclude those? Because those are very volatile. So your price of eggs and your gas to get you those eggs are not being included in the core PCE because those fluctuate too much too fast. They take those out so they can better ingest these data. So seeing this, it's showing that there's an overall neutral bias in the overall market. And then when we look at the market, we can see right away, it ramped up, it pulled back, it ramped up. We're literally dead center of where we started watching this. So this looks really good. So let's go over the chat real quick before we continue. 10 out of 10, thank you, sir. Please like and subscribe, support Dave. Justin, you're the man, I appreciate that. Really appreciate you going for live stream whenever needed. You are so informative. Hey, I appreciate that, Aloon. You're the man. I appreciate you being here. Zamora is in the chat. What up, girl? Good to see you, Zamora. Zamora is our cheerleader. She's here. She's kicking butt. She's learning. She's taking names. You want to look at TKO, or are you saying total knockout? Yeah, our homegirl. She is. She's keeping all the guys in here straight. You don't see a lot of investors that take an interest in the market that are women, and it's good to see it. We need to stay. What's that picture where the woman's like, you know, got the bandana on and she's like this? That's Zamora. That's our Zamora in here. Zamora, you are awesome. We love having you. So TKO, I believe this is the WWE turned to TKO. I think when the UFC ended up buying them out. I could be completely wrong. So before I just sit here and talk out of my ass, let's go ahead and look up TKO and see exactly what it is. So this is what I do. So this here, it's if you guys want this, you can get this. I think it's free actually, but if you pay for the month subscription or whatever, it's in the link, guys. We have an affiliate, but no pressure for that. So we got the quarterly and the annually. It looks like they're doing A-okay, but we want to read what the hell this is. TKO Group Holdings engages in the provisions of sports and entertainment. Its business include the Ultimate Fighting Championship, UFC, and World Wrestling Entertainment, WWE. All right, so I was right. And I think I remember actually talking about this with B. Stewie a long time ago. If you remember B. Stewie, we were talking about this way back here sometime last year. Yeah, before it had this huge ramp, like before they actually bought WWE. So that's pretty interesting. So I'm glad we understand what TKO is, and it does look like it's holding some relative strength against the overall market. If it wants to hold this 21-day moving average, that would be an absolute beautiful thing, guys. Beautiful, beautiful thing. Hey, and while you're here, actually, we'll do that in a minute here. But if you guys have any other tickers that you want me to take a look at, just go ahead and throw them up. TKO was brought up by Justin, and that is an absolute beautiful stock to definitely keep an eye on. There's a lot going on. There's a lot going on with TKO. It looks like they have plenty of room to head to the north side. But the biggest thing, let's look at the weekly. Here's the thing with TKO, okay? They are right at their IPO highs. So this looks like a big cup here. Now, this isn't a William O'Neill type of cup, but this is a cup. If it can trade sideways for a little bit and then get a nice pop, that would be absolutely beautiful for TKO. Let's go ahead and run through the overall indices, and then we'll come back to the chat. Zamora, you're awesome. You don't call me that. S&P 500 here, we can see we're sitting at 507.06. We can see it held that psychological $500 area. We were talking about it yesterday. I did expect a pop, and then I expected a drop. We got the drop, but I did not expect the pop to keep on popping, and then not to mention do a beautiful uppercut to the north side. That's exactly what we got intraday. Now, if we look at the overall daily market, which is down here at the bottom, your daily market here is absolutely beautiful, guys. A nice pop, a pullback, another pop, and then in the after hours, we went way high. Well, why? Why did we go so high in the after hours? It's absolutely amazing to see, but we want to know why. So let's look at Microsoft, right? Microsoft had a nice pop in the after hours. Microsoft pulled back, breaking its 50-day moving average below all of its moving averages, and then it popped all the way up, breaking through all of its moving averages. So when you see that happen, you really start questioning, like, wow, are we a lot stronger than what we thought? Are we just that strong? Well, it sure looks like it. So Microsoft did good. Well, what else? Microsoft isn't just going to solely move the market. Let's look at Google. Google also had a beautiful pop, this beautiful rise. Where is this sitting at right now? 174.55. Are you freaking kidding me? Look at this, 174.55. That has cleared, it's at all-time highs right now. Guys, Google is absolutely killing it. Now, we've been talking on this channel, we always want to watch. We talk about it in Discord every single day. What are the hottest stocks? What is holding up during this overall pullback? And we talked about Google. I remember I was actually talking to Zamora. We were just messing around with intraday, and she goes, now's the time to get in. Now's the time to get in. And I said, intraday, it looks like it's going to pull back, and it did. But after it pulled back, it came right up to where we were talking, and then it went skyrocket. And now look at this. Look at this thing. Absolutely beautiful. You don't ever play the earnings, though. That's the thing, guys. I consider earnings a gamble. Nobody really knows what's going to happen during earnings. If you do know, you need to message me because I want some of that insider information. Let's get rich, baby. You know what I mean? Let's get filthy rich. But no, if you think you know, you don't really know. So don't gamble on those earnings. Unless you already have a good profit cushion. If you do, then you can hold a little piece into there. Totally understand that. So Google looks absolutely amazing. I'm actually going to be playing this morning. I'm going to risk about $100 on a open gap up. I'm going to try it two different ways. I'm going to play the 1 minute opening range break. Okay, that means when the market opens. And guys, when I play this, I need you guys to understand. These are my trades. These are not your trades. I don't want you trading these, okay? But this is what I'm going to do, and I am using risk management first and foremost. When this opens up, I'm going to take a 1 minute range break, meaning this only moves 2.1%. So when this opens up, I need to take it on the 1 minute. If this opens up, I'm gonna wait for the 2nd minute candle. I'm gonna use the low as my stop and the 1 minute top as my buy in, okay? And I'm going to try and get it in is close to around $100, meaning if it comes down and it breaks through that $100, if it breaks that low, then I'll be losing $100. And I can even show you how I'm going to calculate that. I'll do it live on the air for you so you guys have a better understanding. But you guys need to understand this is my trade. This is not your trade. And I like to do live trades for you so you can see what a real trader does, right? And I don't want this to be a day trade. It might end up being a day trade because I'm going to stop out, but it might turn into a swing trade where I'm holding onto this thing for weeks, hopefully months. Hopefully it never comes back, right? And I can just sell little pieces on the way up. Now, let's go ahead and look at other than the SPY. Let's take a look at the QQQs, right? So QQQs is tech heavy. So you can see in the after hours, it really ramped up. I like to zoom out to this hourly to give us a better understanding. Now there's a lot of patterns, a lot of things drawn on here. This is a lot of intraday work, but you guys need to understand where we sit. Right here, we had this downtrend. We're breaking up through. We need to see this hold here. Why? Well, there's a few different reasons. One, we're just getting above a 10-day moving average. We want to see this get above all of those declining moving averages. We are at declining moving averages. So even though that we have Google popping up here and we have Microsoft popping up here, we have, you know, things like, well, Tesla's actually looking pretty good too. It's pulling back. It's at 169. They defended that 160 area many times, guys. So let's go ahead. I'll hit that one up for you, Bob Dan, in just a minute. I just want to go through really quick. It's 9:15 already, guys. We started the chat a little late, so we'll go over ADTH here in just a second. Dan, Bob, can you hear the music okay? Can you hear the music in the background? Let's run through this really quick though, guys, because I want to make sure that we look at some of these stocks. Yeah, so look at that $200 area. Now I keep saying $200 area. Really, it's 199. I just like saying the psychological area of 200, right? Because that's where we're staying below. But this IWM also popped up right into that resistance of 199 and failed again. Okay, so that being said, we need to be really careful with that. Let me see. I'm getting a message for Predator. I do think you know. Okay, cool. Thank you guys. Thank you guys for that. Okay, let's keep on keeping on. I got a lot to get through before this market opens. So let me stay focused here, and then we're going to definitely hit this chat up. Appreciate everybody in the chat right now. You guys are killing it. You guys are awesome. I love the support that we get from this community, guys. I really do love the support. Can't thank you guys anymore. Anyway, enough with the cordial ships. Let's do IWM. So IWM popped up and it dropped down to that 199. We have SMH, which is a semiconductor ETF, still below all those moving averages. We need to be careful. Now the equally weighted, this is really important to me. Equally weighted has just been trading sideways. So even with the tech booming, the financials booming, the consumer staples booming, and then everything else kind of taking a crap, we can see the equally weighted is just trading sideways here. So that's actually a good sign for the overall market if it can sustain sideways action. The Dow Jones Industrial won't open up yet. As the dollar came down a little bit, guys, that's a good sign. We are on a downtrend for the dollar. That's a really good sign for the overall market. Now, is this just slowly coming back before it pops right back up? We'll have to see. Bitcoin looks like it's starting to get really tight here. Really tight on this 50-day moving average. I would like to be alerted if this thing, this is futures. I guess they don't allow you to do alerts on futures, which is kind of interesting. But we have like this, we have this high tight flag on Bitcoin. It could get a little tighter than this though, but it is showing some support as the market does this huge pullback. It's still holding that 50-day moving average. So Bitcoin looks actually very frosty in this area. So let me go ahead and do one more thing here, guys, and then we're definitely going to hit up that chat. I want to make sure. Appreciate you, Dan. Bob, you're on top of it. Thank you so much. All right, there we go. That's looking good. Yeah, so the PCE coming out the way it did, looking neutral, but the overall market yesterday was rip, tater, chip to the north side. Are we going to continue to get that that movement, that price action? Now, with GC, this is gold futures. We're going to see if this wants to continue to the north side. That would be absolutely beautiful if it does. We're going to see what we can do with gold if it wants to rip, tater, chip. The VIX volatility index is showing, wow, now this is a really good sign, guys. This is a really good sign. If I've seen anything, this is probably the best sign out of all of them, and that is the VIX volatility index came right back down to these lows at 1548. This is what we want to see, guys. This is what we want to see. Oh, we gotta, come here, Reese. We got a crying baby in this house, guys. We got a crying baby. If that is not some good birth control for you, I don't know what will be. Okay, so let's go over, I want to see NVIDIA. NVIDIA, come here, mister. Come here. Nobody wants to hear a baby crying. Come here. You want to say hi? Say hi. Oh, man, yeah. Say hi. Hi. Yeah, that's Daddy's puppy. Say hi. Hi. Give it a kiss. Good boy. All right, so NVIDIA looks like it's just trading at this area of resistance. If this area of resistance starts to fold, I think we could come down pretty quick, as we have seen 2 other times at this price area. Now, if it keeps creating new higher lows in this area, that's going to be beautiful for a breakout. But until we get those new higher lows, we need 3 new higher lows before I'm going to be sure on this, okay? So we're going to keep a close eye on NVIDIA because I think it looks like to me that it could come down today. SMCI, same thing. Area of resistance right here. Can it come down? Is it going to keep channeling sideways? That's going to be very, very interesting. Thank you, Bob Dan, appreciate that. Tesla pulling back after a 10% move off of these lows. Absolutely beautiful move to the north side. Now pulling back about 3% of that 10% move. Netflix is just trading sideways at these lows, still under a lot of resistance above. Microsoft, though, now pulling back. We drew this area out for you while we were in Discord here, guys. This is that area of resistance. It pops up into this area and then it just got smacked and it looks like it's coming right back down. So I think my overall bias is staying the same. It's going to be a pullback in this overall market. So we're going to see what actually happens here, because nobody actually knows. If somebody is telling you that they know exactly what's going to happen in this market, then you know not to listen to them, because they are liars. They can be right sometimes and wrong sometimes, but a lot of times those are the people that will simply hide their losses. We don't hide losses here. We show you the gains. We show you the losses, because remember, you're a loser unless you're learning, baby. And we always want to learn. I learned that I had a typo the other day on that. It was hilarious. Predator pointed it out to me. I love these typos because I get to typing really fast. I don't even look at them. But I had that. You're a loser unless you're learning, but the unless was spelt with an I. So it was like, well, it looks like right there I can learn something right from, you know what I mean? You know, so I learned something right from the old saying right there. So let's go ahead and go over what we got in the chat. So we have ADTH from Bob. Bob, oh yeah, that's getting tight, Bob. The thing with this sideways action is, man, that is really tight. Let me move this up here. Yeah, it's starting to break out a little bit right here, a little bit more volume coming in for it. I don't know what ADTH is, so let's just bring it up, ADTH, and let's figure out what ADTH is. So ADTH is in the technology services, which is great because that's hot. That's a hot service right now. And then it engages in the provision of real-time bidding, enabling mobile and networking services. The firm operates a programmatic digital advertising provider, which focuses on the machine learning technology and solutions to deliver real-world value for advertisers and marketers. Okay, so that's good. Yeah, guys, thanks, Bob Dan, for throwing that up in the chat. Looks like Zamora wants to know what's going on for GD. Hey, you don't need to talk over me, buddy. Here, just say hi. This right here is our future analytics. Mr. Worrell, would you like to give the analytics on GD, please? Yesterday, it looked like GD was holding up here around that 295 area. Nope, that's dead us. And then we had a huge pullback. We had earnings come out here, guys, and it came out about as expected, only a penny less. And you can see GD, which is General Dynamics, had a nice little pullback here. Now, I will say this, though, even with that, if we look at the overall trend for General Dynamics, you can see here we're above a rising 200-day moving average, and it's very, very clear. This 50, I'm not even going to draw it out. This green line right here, this 50-day moving average, look at this. Beautiful uptrend here. It's really trying to hold this 50-day moving average. And you can see the last time it came to this 50-day moving average right here, it held that area. So if it wants to hold that 50-day moving average again, that might be an actual beautiful area to show as a support. A risk management area would be perfect for that area. So that's a good trade idea, Zamora. I like what you're looking at. That's a lot better than some of those penny stocks. So I would definitely put that on your watch list. And remember, Zamora, I told you, you can do, come on, buddy, don't unplug that. You can do paper trading just by marking it out where you want, or even writing down the price, so you have a better understanding if what you're doing is right. Okay, so mark that out. Mark that out. If you want to take this, mark out where you would want to get in, where your stop loss would be, and where your first half or your first profit taking would be. And that's going to help you out in the long run. Bob, yeah, family first, dude. Always family first. It's unfortunate, man. The wife is not feeling too up to snuff today. I feel horrible for her because she's got a track meet today. So the baby is going to be under dad's care today. Ooh, hopefully everything goes well. No, I'm only kidding. I got a friend dinner today. He's going to be cooking up some fish for me. He's got some walleye he's cooking up. Some sweet potatoes. So after the baby wakes up from his 2-hour nap, we're going to go over there and smash on some walleye. So I don't know if where you guys are from, but I am from Michigan. I grew up next to Lake Erie. We eat, we don't eat fish all the time, but we're very keen to eating a lot of fish, and we eat a lot of fish from the lake. And that's one thing he likes to do. He likes to go up the channel. He likes to fish. So shout out to you, Brandon. I know you're probably not listening, but if you do, talking about you, baby boy. So I'm going to hang out with him today, and that's going to be some good eating, man. Good eating. Okay, so guys, we only have 5 minutes till market open. I only have one trade idea, and now that I'm looking at the overall market, and my bias is to the sell side, this Google trade is interesting, but it's not captivating anymore, right? Because we're seeing a lot of, oh, and by the way, Meta had that pullback. So if we look at the overall big tech, we have Meta, big pullback. We got MSoft, Softy. We had a nice pop, but it's starting to pull back because it's in that resistance area. We had Google, big pop. That's actually holding out very, very well up here. Very, very well. We have NVIDIA. To me, in this area, it's an area of resistance because more than one time in this area, when we got to this area, we climbed up here. It took 2 days. We gave it all back, not all, but most of it back in a day, about 1.5 days worth back. Then we're climbing all the way back up here. We're in this area again. I have a feeling that this is an area of resistance, and we're gonna head back down today. So it should be very interesting to see. So my bias is going to be to the sell side. With 3 minutes left to go, we got one more we'll get for Zamora. You did APL, or are you talking AAPL? So Apple, I'm assuming that is what you meant, not APL. If we're talking about Apple, Apple, guys, it's below a 200-day curling down moving average. It's not pretty. It's not pretty for this. It's up in here into resistance. You might be into trying to catch a falling knife, but I am not. This is not something I'm looking at trying to do. It needs to be up above a 200-day moving average, creating new lower highs in order for me to want to take something like this. So like right here would be an ideal spot. Right here is one new lower high, the third new higher low. So 1, 2, third new higher low above a 200-day moving average and breaking this base right here. Okay, then it takes off to the north side and holds that 30-day moving average. Okay, so that's a good spot right there. I know this is in hindsight, but I'm trying to give you an example so you understand. Maybe this is the low, but I can't get into this until it breaks this 200-day moving average, maybe creating new higher lows, going something like this. It goes up here, comes down. This is your new higher low, up, down. Here's another new higher low right here, up, creates a base maybe right here. Maybe it bases out right here for a little bit. And then when it breaks up through here, we can take a bid somewhere like right here. Okay. So that's kind of just how I would want to see Apple move if I were to take it. Okay. So sure, you could say grab it down here, but the low might keep on going lower. And you never know. You never know what might happen with that. So let's look at the only trade that I'm still holding, and that's KLG. We're up about $300 on this trade. We took it at these lows here, this 10-day moving average. It did have that base breakout, just as we were talking about. It got nice and tight. I thought it could get a little tighter. I was just getting in a little early with a small share size. Heck, if I knew what it was going to do, or if I believed in this push in this consumer staple, I would have got a lot more shares. But hey, we'll take a $24 risk to make over $300. That is the risk reward we want to see when we're doing these trades, okay? So, excuse me, let's pay attention, let's be alert, and let's keep in mind, we need to use risk management, guys. If I'm calling out any tickers, just know they are mine to watch. It's something for you to watch. It's not what I'm buying, selling, or trading. It might be, but remember, they're my trades, they're not yours. So just read the disclaimer, guys. I don't want to get sued for anybody's losses. You need to understand risk management before you ever take a trade, okay? So if I do take a trade today, we are going to be sure that you know it's my trade. Anytime I do take a trade, I like to always give an understanding of what my risk is. So you'll get to hear that as well. All right, we got 16 seconds till market open, ladies and gentlemen. Cheers. This one is for you, not for me. All right. Looks like the market is starting to fail right before open for the SPY. And the S&P 500 does start to kind of drip down here a little bit right at that market open. But we have a nice gap up right there. You know, that looks really, really good. But the market likes to fill those gaps sometimes. PAAS just hit off my alert. We got a lot of alerts. LMND, so lemonade. That I wasn't expecting that alert to come off. So PAAS just popped up. LMND just popped up. That's an interesting one because we got this huge base going on here. Let's look at GOOGL just because this is that 1 minute opening break. We're going to see what this looks like. If it's too big of a 1 minute and it beats this its actual daily average move, then I'm not going to want to take it. So we're going to see where this ends up by the next minute, and we'll see. Let's go ahead and look at the QQQs, and they're failing. NVIDIA is probably going to be doing roughly the same thing. NVIDIA is just popping around here. Let's see here. Yes, sir, Bob. It's looking good. It's looking good. GAU, which I believe is gold. It is gold. It is breaking that area of support, or this is my trend break strategy here, guys. So I like this. It created a new higher low here. So at this area, we want to measure this. We want to see at 10%, it moves 8%. So it's a little outside my risk, and it's just real, not a lot of volume being traded here. If we look at the hour, you can get a better idea of what actually is going on in this. Let's see, this consumer staple isn't doing much right here in this area. We're going to let that moving average catch up to it. Let's go back to Google, GOOGL. Okay, so Google does look like it's giving a nice little pullback there. I do want to keep an eye on NVIDIA because, yeah, I was expecting this thing to pull back, and it looks like that's exactly what it's doing here. The issue with this is I can't really justify using the high a day on this. I mean, I guess I could play the 1 minute breakdown, but I'm already missing it. Already missing that 1 minute breakdown. Sorry about the noise in the background, guys. 841.54, and if it came all the way back up to here, I could probably get this. 835. What about the 5 minute here? So we haven't made it to the next 5 minute. Yeah, I just feel like we're gonna cave down here. Yeah, no trades so far, guys. No trades so far. We're just keeping an eye on stuff. I'll take a look at the chat here in a little bit for anything. Yeah, it does look like we are starting to curl down here. Will we find support? That's the real question here. If we could find some support down here, that would be a beautiful thing for continuation to the north side. But I'm not seeing too much really go on. So while you guys are here, while I still got you guys in the chat, why don't we look at the screen really quick, guys? Do me a huge favor. While I got you here, click this like button, smash that like button for me. I appreciate you. And hit the subscribe if you haven't already. If I'm bringing you any type of entertainment, if you're learning any little thing in here, just hit that like, hit that subscribe button. We bring you all the data, all the bite-sized data. We try and bring it to you as quick as we possibly can. That's actually something I'm working on, that PCE data. I'll be bringing that video, that short video out for anybody who's a little late to the market today, and we'll get them all up to date on all of that. All right. Let's see here. There we go. There's a nice little pop in the video. Like to see that. Lot going on. Look at that. Nvidia's popping. She's popping. Let's look at Google. Google on that 5 minute. Let's see what Google looks like on that 1 minute. Yeah, it just broke way down. So let's see if this can be the low. 2.1%. Its average is 2.1%. So that's actually a good risk reward here. That's a good risk reward. So if it breaks up and breaks this high, I mean, I could go either way with this, right? I could play it to the high if the overall market wants to go higher. I could play this to the high, risking this low because the average daily range is 2.1%. This move is 2.1%. So if it breaks this out, I can actually hold this and to see if it has continuation as an episodic pivot. And thank you, B. Stewie. I appreciate that. If it wants to break down, I could play that on the 5 minute for the breakdown. So you guys can see here, the 5 minute just started. You can look at this area right here for the 5 minute breakdown, meaning the first candle's at 5 minutes. The second candle, if it wants to break down, then we risk 171, and our risk would be 174.50. And then we would calculate those shares and then multiply the difference. And that's how many shares you're going to get for your average price. So depending on which way this goes, we can play it either way. We want to see how the overall market is doing and what our bias is. So if we think the market's going to continue higher or if it's going to come right back down. So I will say we're at an area of resistance. We are at an area of resistance. If we break up higher than this, that would be amazing for the overall market, making new highs. But if we start to break down from here, our least path of resistance is back to where we came from. QQQs is looking still a bit neutral, still holding the most of its gains from its previous close. The S&P 500 still holding most of its gains from its previous close. The IWM, the same thing. Well, it's definitely not higher than the rest of the indices because it had that big pullback after that pop. But if it can hold as well, we would want to see this thing continue to the north side. So let's go ahead and give this some more time to get a better understanding of what's going on. But yeah, we have some plays out here, but how we want to play them is the real question here, guys. We could go either way on all of these. As we look at Nvidia, it's trading at 837.77. What are all these lines? Well, all these lines tell me all the data, everything that I want to know from previous time. I have this red area marked out because that is its area that it first broke down at. The last time we were here and it broke this area, this thing flushed and did not look back. It was very, very scary for Nvidia. If you were an investor, if you were holding a large position, this area, the last time it broke, like here, I'll just give you a shot. If you guys remember this, I made quite a bit of money on this this drop here. You know, we could have played it for a lot bigger of a drop, but you know, I like to take profits on the way down. We took them all out within, you know, I don't know, 30 minutes to an hour here. I mean, this thing just flushed. I think we even took them within 10 or 15 minutes, guys. We made a lot of money right here when this thing broke down. That was absolutely beautiful to see. So let's see. Let's go ahead and come back over here. So that's what this red area is. Now, is that same flush area going to act as support? That's an important piece of data right there. If this area does act as support and wants to continue higher, you know, that might be a little something to take in. As the S&P 500 is still holding most of those gains, so is the QQQ. Actually, the QQQ looks even stronger. IWM, there we go. IWM's getting a nice push there as well. It's still very early in the day, so we're going to see what actually wants to happen here. Looks like KLG, we're down like $11 on this. We need this thing just to continue sideways. Let these moving averages catch up to this area before it can take off. Let some of my friends like Bob Dan Bob get into this, so that way we can keep on keeping on. So very interesting morning, guys, but not too much going on. I do want to calculate this though, because if it does give this V-shaped recovery and breaks through this top, I want to have my risk. So it's 174.71. I'm going to show you how I'm going to do this, okay? So I'll bring up my calculator. I'll say 174.71 because that's this top right here. 174, actually 174. That's close enough. And then we'll subtract this low, which is 171.02. So we're going to subtract 171.02. And that gives us a rough idea of how much each share cost if you decide to buy it. So if you have $3.69 and we multiply that by, let's just do 10, that's $36, right? That's real easy math, right? So we took the price per share by subtracting the top from the bottom, and that tells you how much each share would cost if you were to buy it. Then if you could take that and you can multiply by how many shares you want, that'll tell you exactly what your risk is, okay? So if we wanted, let's go ahead and do, so 170, 174 minus 171 is 369. So $3.69. Let's multiply that by 22, and that gives you $81. And so that's pretty decent risk, right? We could, let's do 369 times 26. There you go. So we can get 26, about 28 shares. 28 shares, that'll be a risk of $100. So that's what we're calculating. We're subtracting the top from the bottom, and then that gives us that 369. We multiply that by 28. That gives us close to $100. So that way, when you actually take this trade, and you risk the low or you risk the high, depending on if you're buying or selling, that will show you exactly what your risk is. We need to know what your risk is before you get in. You need to know where your stop loss is going to be. You need to know what you're willing to risk. And then from there, you calculate it, you understand it, you ingest it, and then you get in it and you play your damn play, okay? So if this breaks this high a day and I want to get in, I'm going to buy 28 shares because it's only a $100 risk, okay? If it breaks this low, I can short it and I can get in risking this high a day, and that will be a $100 risk. I think my baby just likes to slam doors, but if that's what keeps him entertained, right? You want a bowl of Kellogg. That's funny, man. Yeah, KLG. I know you want in that KLG, baby. That KLG is a beautiful thing. It's a good mover, man. It's been on an uptrend. It's a consumer staple. If the overall market wants to come down, you know, that consumer staple is still going to do good. And we'll see what it does. If the Kellogg is holding up, well, the overall market pulled during this pullback and Kellogg kept moving up. What do you think is going to happen when the market moves up? You think Kellogg's going to come down? I doubt it. I think Kellogg's going to continue higher, if not really get some legs and move higher faster. All right, guys, it's that time. Look at my screen real quick. Hit this like. Let me refresh this. Let's see how many likes we got. Excuse me. We only got 8 likes? Come on, guys. Well, at least we beat yesterday. Let's get it up to 10 likes. Smash that like button. Let's get up to 10 likes. Hit that subscribe button if you haven't already. We bring you the bite-sized data. We bring you live entertainment. We bring you all the necessities needed to stay safe in this trading, like risk management, how to buy and sell. We do it all here, baby, and I put it on the line for you, and all I ask is for your time to smash the like, smash the subscribe button, and for my son to not smash his fingers. So it's a good time here. I'll tell you, it's a good time here. And this is real trading, guys. This is real trading. If you're trading from home, if you're doing this from home, if you're working from home, you're going to have family, you're going to have friends, you're going to have babies, you're going to have things going on in your market. I tell you, one of these days, we're going to have a team of investors here in the office. We're going to have people set up all around me. We're going to have their own office, and it's going to get real loud and crazy in here, and that's what I'm going to like. We're going to have our own proprietary trading firm real soon here. It's going to be beautiful. I'll have all my brothers, all my children trading. You know, they'll be trading like Fisher Price and like Roblox. Speaking of Roblox, RBLX, let's take a little peeky gander. Yeah, man. You know, I lost a lot of money on Roblox trying to short this, and I was just a little too early. Man. If I could have just held off a little bit, I could have made a ton of money on shorting Roblox. But anyway. All right, guys. I think we're going to call that a morning. Things are getting a little spicy here at the house. And so we just need to keep in mind, I do have a biasy to the sell side. So keep that in mind. That's my main look. So make sure you guys tune in tomorrow in the Discord. If you haven't joined it already, it's absolutely free. We aren't going to ask for any stinking money. So make sure you join me. And we absolutely love you. Thanks for joining. And we'll get that.